Robert Heffernan, Endotech Analytics, streaming live exclusively for Pareto token holders. This is Blockchain Vitals, our daily show talking things crypto, blockchain, etc., etc., etc. I'm working on a little technology here myself. It is Friday, 3/2/2018, and it's morning. It's 3/3 in Asia. We do the sheet every day. We publish the sheet every day for Asia's opening. That's what we're running our sheet on, that 24-hour cycle. And we got a hashtag going, hashtag CNS, Cryptos Never Sleep, because we will be trading. Well, we have orders in. We're ready to trade 24/7, 365 days a year, because that's what the crypto markets bring you, is degenerate trading for those who cannot take their hand off the mouse. I not necessarily sit there all day at the con, we call it, at the con, at the controls in front of the screen. But orders certainly can be working 24/7, 365 days a year. And you got to kind of think about this market in that respect. In order to take advantage of great buying opportunities, right, and also fantastic profit-taking levels. If you don't have your orders in, you can't participate. And I'll say it again, 100% of your orders that are not in will be unable. If you're not sitting at the con when it happens, you can't participate. Therefore, you should really always have your ideas to paper and orders in the queue in order to take advantage of market movement. All right, let's do the rounds. All right, doing the rounds. It's a segment every day where we do talk a little bit about blockchain news. And the thing that jumped out at me today, just every day there's another reaffirmation that the technology is not going away, that this is we're still in the infancy of this asset class. But today, BMW, a fairly well recognized company, I would say, and a technologically advanced company with their automobiles for years, embracing blockchain with a partnership with VeChain that's bringing blockchain to supply chain logistics. Again, disrupting this technology is going to disrupt most everything that you can think of. I think in one way or another. Get the horsewhips ready, because a lot of people are going to be horsewhipped out of jobs, and others will, have a wonderful windfall creating things with this technology as its backbone, as the Pareto network is going to. All right. Again, I saw it again today and was reminded again today about exactly why the Pareto network is important as a trial mechanism, we'll call it, for bringing content providers and content consumers together. Because the important part of the mechanism is the rewards that the contributors earn are directly by the consumer's vote. All right, so it's not the reward isn't an advertiser spending dollars because you have eyeballs on a particular network. It's actually people voting yes. These people or this person brought me actionable trading information that I was able to use and make money with. All right, it's a real direct line of rewarding content contributors, and the rewards come from content consumers, and it's about being successful. I love to compete in that environment. All right, I've competed in the pit for several years. The trading floor is a beautiful place to compete. What's great about the trading floor, and I've seen this a little bit about, a lot of chatter about what you think, and this chartist doesn't know what he's talking about, and chartists are just above scumbags. And I love the pit, because the pit was, what's your bid, what's your offer? And by the way, if it isn't the best bid and the best offer, shut your mouth. All right, you have no business opening your mouth in this thing called an open outcry auction. All right, so it was a beautiful place to level the playing field. And you can have an opinion, and that's fine. But if your opinion isn't the best bid or the best offer, you can keep it to yourself until the market gets to that point. Then you can open your mouth. All right. And there's a lot of people that run their mouth without putting any money behind it. Uh, just a few points that I've recognized in the crypto sphere as I am now locked into the matrix. All right, let's take the vitals. Taking the vitals, something we do every day. We call it the vitals because I like using medical terminology, kind of like the health or sickness of a particular asset. And the way I do that is through the blockchain vitals sheet. So let's jump right in and go to dash. Again, dash, what have you not done for me lately? I said it again yesterday. Still cannot, I mean, just congested, moving sideways, nothing doing in this thing. Value range, they wanted it, they wanted to extend here. Value range 601 to 621. Currently sitting below that value range at 599. Just kind of languishing dash. It's below the pivot. It's below the value range. Nothing to get excited about in this thing. If you're day trading it, though, look at how that low value kind of lines up with the pivot, right? So again, once again here, I know we talked about the other day as pivot traders, you're going to be selling at 605, correct? But as a value range trader, if it spends time above 601 and builds some time and volume in that area, I don't want to sell them at 605. I'd rather buy them actually and see it fill that value range up to 621 and then think about selling it there. You got 621 and then you got the center line or the average at 633 in the momentum model, bottom right. And I will be going in detail on the momentum model today in the Doctor is In segment. All right, but just not, dash, just it's nothing to get excited about in its price action so far. And Ethereum, not much better. It's in the middle of its value range. 857 is last, 845 to 866 the value range. It's just dancing around its center line in the momentum model. Currently right at the pivot. This one too, let's talk about as a value range trader. You're going to be waiting for 645 to buy, and especially, I'm looking at and talking about this as if you were a day trader, day trading this stuff, not necessarily long term. You want to buy it at 845, sell it at 866, and play that chop. The pivot right in the middle of that value range again. So the pivot model, you're gonna hear me telling this a lot. I am much more of a user of the pivot targets if I'm day trading than I am strictly of entering the market at the pivot. I like the value range and the momentum levels better for entering, but I do really like the exits on that momentum model. I mean, on that pivot model. And again, the pivot targets are fibs of the expected trading range for that particular asset on that particular day. Again, there's only one way to make money, and that's to take profits. All right, you have to be taking profits. If you're day trading it, you should be. You can be in or out several times in a day, but you got to be taking profits, even if you're looking at daily or weekly time frames or horizons. Even as an investor, when things move to levels that you've thought about in the trade setup as your exit levels, you got to stick to that and take profit on at least some of your stuff. Be a profit taker, all right? And let's go to Bitcoin, the only one really that is showing some life, right? Solidly, again, in up momentum, trading 11,072. It is below its value range. No, it isn't. I take that back. In the value range, right there at the high value, 11,101. Value range 10,909 to 11,101. Solidly in up momentum. I'm long Bitcoin. I was a little leery today as that candle formed, because they made a nice high and they came back and almost looked to me for a while today that it was going to put in the dreaded doji hammer. But it didn't engage strength towards the end of the day, closed solidly in up momentum. I still have orders working up at that up momentum collar area. And we got some expanding potentials going on in here, so I will just keep shifting those offers up into that collar level, and hopefully we get a nice strong rally into the collar level. I could take some profits. If you look at that, the collar and the momentum, you got about a 15% difference between those two, and that's what I'm talking about playing, taking some profits, and then it comes off 15%. You can put stuff back on. But if you don't take the profits, you can never spend it. All right, let's remember that. Another reason you need to take profits is because you're in this space, or anybody that gets into trading is doing it for something. What are you doing it for? Are you doing it to put your kids through college? Are you doing it to build wealth? Are you doing it to day trade because you'd rather day trade because you can make money at it than whatever else you might be doing? You got to think about that. Give that some thought. All right, let's do the Doctor is In segment. The Doctor is in. And we're going to talk Bitcoin today, and we're going to talk about on the sheet the momentum model, which is the bottom right. All right, standard deviation based momentum model, and let's just go through the terminology of it. The first number right there in the middle of the sheet, UMC, means up momentum collar. Second, UM is up momentum. Then there's the center line or the average. Then you have LM, which is the lower momentum, and LMC is the lower momentum collar. You know, when I talk about standard deviation trading, I talk to a lot of people about it and kind of use baseball, of all things, as an analogy. If you're into baseball, and especially baseball as it pertains to batters and batting averages and the streaks you see, good hitters, or the streaks, unfortunately, for bad hitters, what they can go on. But you think about it kind of like that, and that when somebody gets hot, let's say somebody gets hot, you're going to put them in upper momentum on that batting average, right? And you don't want to call when the guy's going to be, toast on it. You want to let your winner run. You want to let that hot guy bat, right? And you want to let him bat until he is not hot anymore. And one way for me in trading is when you gain momentum, you'll have several days in a row, just trading higher and higher and following that momentum level until you reach a point sometimes where there's a blow off and exhaustion where you've taken profit up at that up momentum collar, and or you get a close out of up momentum after being in that direction for several days. And when you think about it like a batting, somebody batting, it's like they closed, they're not hot. Are they going to go completely cold? That's a possibility. Can they regain momentum? Of course they can, but you let the momentum level be that indicator for you. I will tell you that my years of trading experience has taught me that once something has gained strong momentum, been in momentum one way or the other for several days in a row, and I'm talking 5 to 7 to 8 days in a row, and then you get a close out of up momentum, you have a tendency to revisit that center line and sometimes go all the way back down to that opposite momentum level. So in this case, if you were in up momentum for several days, you go back down to that lower momentum level. And again, will tell you this every day, I am a slave to the momentum. All right. In these cryptocurrencies, since you can't short the market, right? I will not be involved in one that is in lower momentum. All right. If something's in lower momentum and it's piqued my interest, maybe there's been news on it, maybe I really think the coin has, or the token has, long-term value or implications, that lower momentum is going to be my guide. That, listen, I love it. I love their story. I love everything about it from a fundamental point of view. From my technical frame of reference, it can't be in lower momentum for me to own it. That's just plain and simple. That's a plain and simple, easy rule that I follow. And I can tell you that over the years, when people follow that rule, that has saved them countless heartaches and many, many dollars. mind the mo. That's what I say. Mind the mo. All right. So that's the momentum model is the bottom right part of the sheet. Again, up momentum collar, up momentum center line, lower momentum collar, and it's just another layer of discipline that you can give yourself when you're trading. Kind of like the Buddhist, the way to the Buddha is your way. All right. Wow, I just got philosophical here in today's episode, but seriously, it's got to be your trading methodology. It can't be. And the beautiful thing about learning about trading and becoming a trader and being responsible to your trading methodology is you got nobody else to blame. All right. And it's a wonderful way to engage in the markets, come together with a disciplined trading approach. When it's going to work, sometimes it's not going to work if you're disciplined and you don't roulette wheel everything on one bet or one trade. It's a great way to make a living. You guys have a great weekend. We won't be up tomorrow for Saturday, although we will have orders working, but we will be back Sunday for Blockchain Vitals Sunday night. We will see you then.